This is Joe Rabil with Rabil Stock Research. So what I want to do today, we're going to talk about the market, obviously. Now that it's coming down into a support area, let's see what it looks like and what we should be on the lookout for. And then we'll go through the symbol requests that came through. But I want to start out with a lesson. And a lot of times I refer to my approach to finding longer term trades as essentially trend following on steroids. And the reason I say that is that we're trying to be trend followers, trying to get on board a market, whatever that market might be. It could be a commodity like gold or something like that, or an individual stock or a sector move, or even the market indice. And just get on board, and as long as it has the potential to continue to make higher highs and higher lows, we want to stick with it. Well, that's a classic kind of trend following approach, right? Until you get stopped out. Well, what I like to do is implement a few things prior to entering these patterns, and it narrows my universe, and it shows me which stocks have the potential to go up. If they're going to go up, could go up for a long time. All right, so I want to go through that in the lesson. Let's go ahead and get going now. Okay, let's start out with this basic graphic, all right, that I think can be helpful if you just understand what we're trying to accomplish. So up top here is the price action, and underneath is the ADX. Now, I'm not showing the DI lines, I'm just showing the ADX line itself. But ideally, we'd want to have both the green and the red kind of crisscrossing back above and below each other. Something like this, below or at or below the 25 line as well. Those would be the strongest patterns in this scenario. Now, in a lot of cases, these lines, these DI lines will poke up a little bit above 25, and that's okay. But we do want some period where all three lines are below. Now, the focus here, and I know I have a specific sideways line drawn here, if you notice the price chart, right? But it could be an ascending triangle as well. If we could be making something like that. We could also be making a downtrend line break, okay, and setting up a low ADX condition 1, 2, 3 reversal. Now, my favorite is this rectangular pattern where we have a sideways line that's been respected for a long time. On a monthly chart, it could be years. On a weekly chart, it could be a year and a half, something like that. And then once we exceed that, we want to be on the lookout for green DI kind of confirming that. Now, I'm going to go through a number of examples, and I want to explain certain aspects to this and how they can come in slightly different forms, but what we're trying to identify and what we're trying to do is get on board something that we don't have to babysit all the time. If you have a stock that is emerging out of this pattern, all right, then the potential for this to continue to trend is much, much higher than the average stock. All right. So you're putting yourself in a pool of stocks, like you've diminished the size. Instead of looking at the ocean, you've got a small pond of stocks that have very high potential. It's almost like fishing in a pond that has really big fish in it rather than trying to fish out in the ocean. All right. So that's what we're trying to do and that's basically what I'm trying to do with my report each week. And what I send over, I'm identifying stocks that have the potential on their monthly and their weekly. I'm going to give you examples of that right now. So let's just start. And I want to go back and just show you some examples, historically speaking, and then we'll go and look at some things a little bit more up to date. So look at this gold pattern, and you can see how we were kind of working our way down, but really spent a decent amount of time working sideways here, and it ended up forming an ascending triangle. Really, where, this was essentially making higher lows here. But look at what the ADX did from essentially right near the beginning of 2016 all the way through the middle of 2019. As this started to break out near the end, we had this long period of low ADX. All right. So that is the precursor. And when this is on a monthly chart, you should assume years, okay, not months. This move is going to last for a long time. All right. So don't assume that you get one leg and it's over. All right, you can go and start looking at stocks on pullbacks or markets and pullbacks and stuff like that after they've emerged out of a big base like this. So we want to be on the lookout for these because it's the start of something rather than the end of something. It's not going to be a single leg in most cases. All right, now look at something like NVIDIA. Everybody knows about NVIDIA. We've been talking about NVIDIA forever. Everybody in the world talks about NVIDIA now, but look at the precursor to the move. You see this low ADX? Look at how long this was spent, almost 6 years in a low ADX condition. While, yeah, there was a little bit of noise here in 2011, but we spent a decent amount of time in a quiet sideways period and then finally emerged. And you can see where the ADX crosses above 25 as things get going here. And this is obviously post-split, so we're looking at, 50 cents. But this is the start of this long emerging pattern. 5 years on a monthly means a long time of trending to follow. All right, so we want to be on the lookout for this type of thing. Tesla, same thing. Now, this is one I remember very closely because here on this pullback, it was during the COVID bear market. I highlighted this on my report emerging out of here because it was holding up so well. But look at what this had. This had this long period of low ADX. Again, this is on a monthly chart. I'm starting out with the monthly examples because I want to show you the ones that spent 4 or 5 years going sideways. And again, this thing went up for a very, very long time, made a pretty dynamic move along the way. Look at Microsoft. Now, this goes back, and this is near and dear to my heart as well. And the reason is, when I was starting to highlight this back, I wasn't working with individual retail investors back then. It was only institutions. But I remember this crystal clear in 2013 as this started to emerge here after this long period of low ADX. I was telling my institutional clients, look, we got to start buying this stock. And really, nobody had an interest in this. Nobody cared about it. No one really liked it at all. The fundamentals were not there yet. They didn't show up until almost a year or two later. Where maybe it was about a year and a half later, where people started to get a lot more interested in it. And they were like, this Microsoft actually looks pretty good now. And so we want to be on the lookout for this pattern. Again, this long, low period. It's where we're building energy for a big move. And a lot of times it'll be where no one is interested in the stock. So you get an early advanced warning that something's developing. Again, SMCI, just like we talked about with NVIDIA, I mean, this is the same concept, long period of low ADX. Now, this is another monthly chart that went sideways for 4, 5, 6 years and then emerged. Now, I'm not showing the history of what happened. Obviously, this went up for a very long time, made a massive move to the upside. And so we want to be watching for this pattern where, in this case, it's almost like a reversal pattern because we broke the downtrend line here and then started to try and turn back to the upside. And once it was more of a confirmed trend coming back up through here, we started to see the green DI staying above, and that caused the ADX to cross as well. So and there are cases where if you get in these low ADX conditions where it might be a little bit early, you could be there a little bit early before it really emerges. And that's why I don't really trade off the monthly chart. This is just giving me insight into what I expect. And then I'm going to go down to the weekly chart to time it. Let's look at grayscale Bitcoin. I remember playing this myself here as this emerged off of this pattern. Again, look at this long, low ADX pattern, and it just dynamic move back to the upside. Now, that was the big move, and it ended up going through a long correction, but it went from 10 to 50 in a very short period of time after, again, the same sideways sort of rectangular pattern developed. And we had a low ADX condition throughout. And let me just give you a few examples on a weekly chart. So remember this Costco, look at this consolidation pattern. In 2023, it finally started to emerge right about the third or fourth quarter. And again, look at this low ADX pattern. Buyers were staying on top, so we could look to buy the breakout, but it gave you a couple really nice pullback entries on on its way to a very nice move. Now, Walmart was a little bit different. It went through a similar pattern on the weekly. It had this low ADX condition, but then it got interrupted by the bear market in 22, right? And then it started on its merry way again, doing this low ADX pattern. So we had two kind of separate low ADX patterns that essentially were the start of this monster move that we've been seeing here. Look at something like Philip Morris. Again, right now, this is making new highs in a market that's really struggling. in a correction mode. We have this 1, 2, 3 reversal develop out of a low ADX condition, right? So maybe not as long of a low ADX condition, but it meets the criteria. And again, this is on a weekly chart, and it's played very well in today's environment. And then look at something like WPM. Now, this is a more recent. It's played with silver. It is a low ADX on the monthly chart. Yeah, only a couple years, but on a monthly chart, that still means we've got some upside potential. So be on the lookout for this. I think these can be really helpful. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own due diligence before making any investments. Okay, so I've got a different chart up here of the spider. This is a daily chart, and I've overlaid moving averages that represent the 18s on different time frames. So I've got a daily 18. Let me just zero in on this real quick. So this is the daily 18, this kind of magenta colored line, right? And then this green line is the 18-week line. All right. And then the blue line is the 18-month. All right. And we can go back and sort of see how this has played out historically speaking. But I like using this. Now, I'm using, these are kind of ballpark estimates of the lines. They're not exact. I think the 18-month is actually just a little bit higher than what this is showing. But at the same time, we're in a interesting spot here, because if you notice what happened and what I've been talking about with my subscribers, notice what happened in 2020, 2021, and how we spent a significant portion of our time stretched away. We went for a long period, and we got farther and farther away from the 18-month line, where the 18-week and the 18-month were separated. The same thing basically just happened here. And as we flip over into a new, so notice how we flipped over into a new calendar year, and that's where we're looking for some kind of a reversal. Now, this one took a little bit longer to play out, but it did create a divergence. I'll talk about that in a second. I'll go through the momentum indicators looking at the QQQ in a second, but the reality is that we had been holding and respecting the 18-week, and then we broke that following divergence, momentum divergence, and now it looks like we're working our way back down to the 18-month. We should assume that this line is going to hold, especially with as bearish as everyone has gotten. We've gotten a lot of people bearish here in a short period of time. So I think, we have to recognize that. I do think that represents the potential for some kind of a rally. Now, if you notice the way this played out the last time, we broke the 18-month, we rallied up, came back and tested, and then we went up and failed at the 18-week and then broke. Now, that doesn't mean that's how this is going to play out this time. We could turn into something like this, where so this made a move down, failed, and then came down through, right? But you could also come down, bounce off this line, fail at this line, and then succeed at holding this line and then turn back up. We don't know how this is going to play out. It could just consolidate in between the 18-week, which is down, and the 18-month, which is rising. Okay. I'm not saying it can't break this line. I'm just saying I don't know that I would assume that. We could easily spend time, working off what's taken place here, the up move that we saw in a more sideways fashion, rather than breaking down and starting a big bear market. So you have to stay open to those possibilities. How we react off of this move here, what kind of strength do we get off of this rally if it actually materializes? I'm not saying it's going to rally, but if it does and we get a move up into the 18, we got to see how strong it is based on the momentum. All right, let's switch over. I want to look at the QQQ here. Because the momentum, I think this is really interesting. So you can see this has actually come all the way back to the 18-month. Now the S&P is slightly above it, not It hasn't touched it, but it's really close as well. But in the process of this pullback, the MACD on the monthly has turned down through its signal line. Okay, so similar to what we saw here. Now, I'm not saying, again, I'm not necessarily looking for that, but it's a sign that that the momentum has slowed. And it tells me that this kind of big red bar here, maybe even the midpoint of this big red bar, is an important level to keep an eye on, because we could easily kind of work our way up and then come back down. And I think that's more likely than just tearing right back up to new highs. I think especially based on the fact that, as I've mentioned, we're in a contraction phase now where these lines have come together, right? And that usually means when this line turns down, it usually means it's going to take a few months. It's not going to just immediately turn back around and these lines separate again and this breaks out again. So I wouldn't be on the lookout for a massive dynamic move that skyrockets to the upside. I'm not saying it can't happen. I'm just saying that's not what I would be looking for. Now, we have on one time frame, we have the MACD crossing down through the signal line. But look at what's taken place on the weekly chart. We have spent all of this time, we were pretty stretched away on the MACD, and now we've worked our way back down to the zero line here, which I consider to be support. This area here is support on this time frame on this indicator. All right, so not surprising if we get some kind of a counter trend move here, some kind of a little rally back up towards the 18-week based on what's taking place here on the MACD. All right, so we have on one time frame, it's telling us we need to be patient. On another time frame, it's telling us we probably have some kind of a trading move. And then if we go to the daily chart, look at the way this is played out on the MACD. So we made this strong move to the downside with confirmation. Then we rallied up and made a new swing low here. And this is the same thing taking place on the S&P. We're holding above the signal line. Not only are we holding above the prior low, right? So this is a divergence because it's holding above the prior low. But not only that, it's doing what I call a divergent pinch, which is pinching in towards the signal line without breaking it, and it's a divergence. Okay, so a lot of times you can get a decent rally off of that, and maybe what we're going to do is head our way back up and test this resistance area up around 500 on the QQQ, and it's around 5,800 in the S&P. So there's room for this to rally. Now, again, when we look at what's taken place on an ADX basis, it's not the type of situation where I would be expecting some kind of a dynamic trend shift to the upside. But we can easily trade around in here after a monster move like this. A lot of times you're going to chop around some before you start a new trend. Okay, our new leg or continuation signal. It's not necessarily straight away and then it just continues. It could do that, but it's just as likely that this spends time consolidating and working sideways. And that's kind of what MACD is giving us some sort of an inkling here. Now, again, if you're going to play anything in here, I think you have to assume that we're going to have some problems as we rally back up. But there's probably some room here for a trader, someone who considers themselves, a trader. I think could maybe take advantage of that kind of a potential move. All right, let's look at the IWM. This one's different. And this is why, I'm leaning more towards, play for trades, play with smaller size, be nimble, use small risk, because this is hitting a new low. This is not showing any signs of a true turn. We're below the 18-month line, and that line, is probably going to act as a resistance on a rally. And when we see that on the IWM or the small caps, we're looking at the Russell 2000 index and looking at a broader list of stocks. Typically, I studied this for years and years. Typically, when this is underperforming, you're not in the best environment to be real aggressive. Now, it doesn't mean you can't get a good rally here, but the odds kind of favor this being more of a trading rally, a tradable rally, rather than some kind of a dynamic shift in the trend. All right, look at something like Amazon that's played out here. We've pulled back to the 18-month line. Okay, our MACD on the weekly has come back down to the zero line. All right, we've been down several weeks now in a row, And there's been some definitely sort of some flushing going on, some pretty heavy volume, but not to the degree where ADX is so strong that it's so powerful that the sellers have taken control on that time frame, right? It's shown up on this time frame, but not on the weekly. You can see the sellers are pretty strong on this time frame. But again, we've got the same pattern develop where we get the flush move to the downside, we rally up, and then we come back down and undercut this low with a divergent pinch. All right. So it's very possible that this could just spend time, this could rally and be a tradable rally, right? But then not turn into a reversal to the upside. So just wanted to make sure I covered that and gave you an individual stock example. And then as I go through and look at more of the requests that came through. So this is another one that I think looks pretty interesting. This one's different. This is actually holding support. It's got support at the 18-month. The RSI has been holding now. Right. And so we've got this rising 18-month. We've got good momentum conditions on the monthly. And now we've worked our way back down to the zero line and we don't have a lot of selling strength. So this is a stock that if the market started to stabilize here, I think could play pretty well. So this is a good one to keep an eye on. I don't know that it's quite ready to enter because we're below the declining 18-week. I probably make this push either. It's going to either fail here, come back down, and then I would look to play that, or you let it break out and then look to play the first higher low, pull back, and you could do that off the daily chart after it pulls back. But definitely a stock to keep a close eye on. And then look at CPRX. Pretty good strength here. I mean, breaking through this 20 level was pretty important. And now look at what's played out on this time frame. We've got really strong momentum, and we're forming a little mini reverse divergence. Let me zero in on this so you can really see it. Higher low in price, lower low in MACD, and good momentum conditions with the buyers still in command. And look at the volume pattern. You can definitely see the volume is still suggesting strength here. Now, I mean, we're in a tough environment for this type of a stock. So be sure to make sure you get a good signal here coming back up. I'd actually like to make sure this made a closing basis higher pivot low. So we're going to need to close above the low bar. Right now, this is the low bar of the pullback. So we need to close above that to form a higher pivot low. But I think based on the way this is trading, I think you've got, the potential here for some kind of a trading move. Not a bad look to it. And then if we look at this TCEHY, Tencent Holdings, we're pulling back. It's got a pretty good look to the longer term pattern. We need this a little bit closer to the 60 mark, and that will form an opposing trend trigger. Now, even if you want to play this on a longer term basis, I would still suggest waiting for that to take place here. Let this come in a little bit more, get a little bit closer to 60, and then make sure a trigger shows up on this time frame. And then you could play it off the longer term time frame. This is something I teach in my weekly videos for my subscribers. Thanks for watching today. So if you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn some more about some of these techniques, you can go to my YouTube channel. It's called Invest Like a Pro. Have a great week, and we'll see you next time.